All right. Yeah, let's get into it, right? So I'm just gonna be touching through, some of the things that I think most of the people, especially when it comes to trading ICC, they struggle with. Especially when it comes to ICC, people, I think everybody knows what ICC means, but for those I think that don't know, ICC stands for indication, correction, and then continuation. So that's the whole ICC concept. And then what we're going to talk about from this day one series of 7 days is going to be what ICC means and how it can be applied into price action. And then also understanding the bullish and the bearish structures. Also understanding your higher highs, your higher lows, your lower highs and lower lows, and then also how structure tells you where price is going. This will help you understand how ICC views the market in pure structure form, right? So those are the kind of things that we're gonna be covering today. It's not gonna be much, but I think it will be able to, at least do what you want it to do. So yeah, pretty much, right? So right, okay. Uh, what's happening? All right, yeah. So one of the things mentioned there, it is the ICC and how it can be applied into market structure, right? So I want to give it into, how the most simplest form you can explain ICC, right? So let's say you are in an uptrend, right? For it to continue to be an uptrend, you need to break a high, right? So this will be the high, and then prices to come and retest, right? This will be the retest, and then price has to continue to go up, you know. So in ICC, because sorry about this, guys. Uh, all right, sorry about this. I'm getting calls. All right. So basically, this area around here, that's where the previous high was, right? So the reason that we consider that area of interest is because we had this higher high where we had a higher high here, we had a higher high here, right? We had a higher high at that area, right? So market created a higher high and then came back to create a higher low around this area, created a higher low. And this, by the way, this would be usually on a 4 hour or 1 hour. This is for the trend. Now, we want to show ICC on the trend side, right? So market will create a higher high, will create a higher low, right? Then the market will shoot up to the upside to continue the trend, right? Now we're breaking the highs. So for an uptrend, we have to break the highs, right? So we're breaking this high with creating another higher high because this high is higher than this one, right? So now also this is a higher high because this is higher than this high, so it's a higher high, right? So now market has to come back to create another higher low at this point, right? I have to create another higher low at this point, and then the market does that, and comes and creates a higher low at this point, right? Okay, so now ICC, how we trade ICC is we have a higher high, we have a higher low. Now that we know that we are bullish, now the market will come eventually to go up. The market has to give an indication that the market is bullish. That's where the I in ICC comes from, right? That's where the I in ICC comes from. So the market has to create that high, right? So this movement here, all of this movement here, will be an indication to the upside. So this here would be the indication to the upside, the indication that we are bullish, right? Okay. So now market has to come back and retest. right? So you will see something like this when you go to maybe smaller time frames and whatever, 15 minute, MT, one, whatever the case may be. You'll see this happening sometimes even on 1 hour, because if all of this movement is happening on a 4 hour, you will see this on a 1 hour, right? So now all of this movement that is currently happening here, all of this movement that is currently happening here, this movement that is currently happening here, let me change this to, let's say, gray, right? So all of this movement that is currently happening here, all of this, now that's a correction. We call this a correction. Let me just even do this. Yeah. This whole movement here is the correction. The C in ICC. This is the correction. This is the correction part, right? Now, the market has to continue to come and break this higher high to create another higher high. So now we're looking for the continuation to the upside, because we know overall the market is bullish we have a bullish structure. We are bullish on a bigger time frame, right? We have a bullish trend or structure. Right. So now we know that we are bullish. We're looking to buy to the upside. So how do we buy? We wait for that, the change in market structure from this correction that was happening, so we can start looking to take the buys to the upside. Usually, it will be breaking the higher lows, the lower highs that were created on this correction that was here, starting to have those higher highs and higher lows now on a smaller time frame, right? So once you start having those higher highs and higher lows in a small time frame, you can start looking for levels on smaller time frames, so that you can start looking for that continuation to the upside. So now this would be the continuation to the upside. So I'm just gonna do continuation, probably blue. Yeah. So this would be the continuation to the upside. This one, yeah, to continue the bullish or the uptrend that is currently happening, right? So this would be the continuation to the upside, right? So I like to add my spin to this thing, because I see how it can maybe be easier for some people. So I like to also add correlation. You understand? I like to add correlation, because it is imperative that this bullish trend from a bigger time frame correlates with the one that is on a smaller time frame. So if we're looking for buys on a bigger time frame, and now the correction is becoming bullish on the 15 minute, MT 5 minutes, we are bullish. Once we start to be, we are bearish. Once we start to be bullish on 15 minutes and MT on 5 minutes, now we are in correlation with the overall structure in terms of the movement, in terms of where we're going. Now, because now once you've plotted your level of resistance and level of resistance and support in terms of where price is usually bouncing off of, then it is much easier for you to be able to take those entries, because now you're starting to have those higher highs, you're starting to have those higher lows. Now everything is in correlation, everything is is in sync in terms of the movement, in terms of how everything is going. And I did mention on our previous video that for me, I usually prefer that in terms of the correction, if the correction can come up until here, probably into not even breaking the higher lows, but into the higher heights. This becomes much easier for me to take the entry, because now I know that because of this indication that happened, anything above this higher high would be bullish. Now the only thing left for me to do is to make sure that correlates. Everything correlates in terms of time frame, in terms of movement. So we have higher highs, we have higher lows. You understand? So on a bigger time frame, you want to have the same thing happening on a smaller time frames, where now you are above those levels where price price is able to buy above those levels, right? So now you can be able to buy above those levels. Like for now, because of this indication and this higher high, we know that anything above this level will be bullish. Now we wait for the correction to finish. Once the correction is finished, once price starts to build those higher highs and higher lows, also on a smaller time frame, which correlates with the bigger time frame in terms of higher highs and higher lows, when it shows that we are overall bullish, the one thing that you want to do is be able to ensure that everything now is in correlation. You want to look for those levels because now you are above a level where price had shown you before that price is able to buy above that level. So hence the entries to buy, to take those entries to the upside above that price. So hence I was saying I prefer, price correcting back into the higher highs and then creating a higher low at that level, because it becomes much easier for me to be able to take entries in above this level of a higher high, right? So that's pretty much how I view ICC and how you should be able to view it. Even on the downside, it would be vice versa. Once everything is on the downside, right? So for instance, I'm just gonna create an example for others also quickly. Right. So this would be now on a downtrend. This is how your downtrend would look. Lower lows, lower high, right? Lower lows, lower high. Same thing also here. Lower low, also here, a lower high, right? So also remember, you're gonna be having some of the things like your the indication also. The indication came from here, where price broke below this lower low to create another lower low to indicate that we are still bearish. You understand? And then price decided to correct back into the lower lows with creating a lower high to show also that we are still bearish, right? And then we're not breaking any lower highs, we're just correcting back into the lower lows, right? And with a lower, and then market creates a lower high. Now that you know anything below this level is bearish because of this indication that happened here, so price showing that it can sell and the market is bearish, is it can sell below this level. Once price starts to break below these levels, you can then start to look for sellers, because now everything else comes back to this correlation. Everything now can correlate, because now on a smaller time frame, you're gonna have a downtrend starting to happen here, so that you can start taking those sell opportunities to the downside. So that's how you want to correlate everything. When I start having those lower lows, lower highs, lower lows, lower highs, and then you can mark off those levels of support and resistance in terms of those entries once start looking for those entries. So that's how pretty much you will be looking to get those entries also. So this will also be an indication. Now also this would be the correction, and also this would be the continuation. So everything needs to be in sync and everything needs to happen exactly how it should happen. You understand? So the indication, the correction, the continuation. We don't miss steps. The indication, the correction, the continuation, and then the correlation at the end. You understand? That's why I'm saying you have to ensure everything correlates in terms of the movement, in terms of then the time frames. All of the time frames are in sync in terms of the trend. That's when it's much easier to be able to take those trades. You understand? So I think in terms of what you wanted to cover, we covered what ICC means, and we've also covered understanding a bullish and a bearish structure. We've also covered pretty much the higher highs, the higher lows, and the lower highs and lower lows, which you can find the others like higher highs and higher lows on an uptrend or on a bullish trend. and then the lower highs and the lower lows would be found on a bearish or a downtrend. Then these, in terms of now, something that you want to tap into in terms of how structure tells you where price is going. So this would be in terms of how, as I was saying, that once price can be able to, let me just even exit here so I can go into this. Once price has shown you that it can sell below this level by creating an indication on a bigger time frame. Remember, most of these trends will be found on a 4 hour or on 1 hour time frame, right? So now, once price has shown you that it can sell below, this level or below a lower low, it giving you another lower low and then going to create a lower high. Now, this is showing you exactly what they say, how structure tells you where price is going, right? So now structure already gave you an indication that below this level, I'm willing to sell. And now it's corrected back and giving you a lower high. Now it's telling you once it start to give you those lower lows and lower highs on a smaller time frame. And now the correlation comes into play where I say everything has to correlate, everything has to be in sync. Then all of this will start to make sense because now it's telling you where price is going. You understand? Price is bearish. Price is we're gonna sell this price, and you wanna sell that price below this level because now the structure on the bigger time frames where you have higher highs and where you have lower lows and lower highs, and on a smaller time frame you also have lower lows and lower highs on mostly preferred 15 minutes and 5 minutes where you have those lower lows and lower highs also. They're in correlation with the bigger time frame. What is a 4 hour or what is a 1 hour time frame? It becomes much easier for you to be able to know where price is going. Now you know that price is going. So I might be looking to take my shorts from sorry about that. Yeah, I might be looking to take my shorts probably somewhere here, probably somewhere. Yeah, sorry about that. Let me just yeah. So it's probably somewhere here until this level because now structure is giving you those kind of indication and you know that below this level price is willing to sell. So you will know that price will come from here until this level because that's pretty much how everything unfolds in terms of trading any kind of pair, whether it's Bitcoin, whether it's CFDs in the indices and whatever the case may be, Forex, whatever the case may be. But that's how you will be able to read the price. Even when it comes to synthetic indices, this is how it works all the way. You understand? So I'm just gonna delete everything. I hope you guys caught that. And then I'm gonna reset chart. So I'm just gonna give you an indication. Recently, we've seen a nice push to the upside also in terms of gold. Gold creating a new all-time high today. Also us hitting our TP today. Early in the market open when market opened in the early hours of today on Monday, the 6th of October, right? So now gold went up, right? Gold went up, and there's literally no structure in a way ever since it broke these levels. It hasn't been giving us a proper structure. So you can, and this is on a 1 hour, so you can move down to M30, start to see what price is giving you on M30, right? Now we're starting to get a nice clear picture of what's currently happening, right? You had this push to the upside, higher high, higher low, and then we can say you can treat this also as a higher high, higher low, and then higher high, higher low, and also another higher high, and then probably this low here is a higher low because it's higher than this low, also higher low. So price might be even looking to go to the upside, right? So those are the kind of things you look at. This we already have a structure. Now you can mark off based off those levels. But remember, I also mentioned that some of you who don't know how to mark your charts as of yet, try to use this indicator the indicator which is higher high, lower lows indicator by the loan sum on trading view, right? So this would definitely help you with marking your levels or understanding those higher highs and higher lows levels, right? So we've already marked off this, but I highly, if you're starting out and you don't really understand, market structure as of yet, or price action, just try to use this indicator only for 4 hour and 1 hour. Once, if you don't know how to use it properly, just use it on 1 hour and 4 hour just to mark off your levels, understand where you are in the market, and then switch it off, right? And then you can mark off. I'm just gonna make a quick example here. You can mark off this level because that's where the indication came from. We had this higher price push to the upside, giving us another high price corrected back to this level and pushed to the other side and gave also another high. So price also was correcting and then starting to push to the upside also, probably to create another high, right? So we have a higher low, higher low, higher high. Probably this is a higher low, probably another high. So this is how you can be able to read price going forward, right? So you already marked this level. This is the level of interest, right? So now also you can mark off this level because this level also is where price show that it can be bullish above it, right? So now you want to move into smaller time frames like your 15-minute time frame, right? So with the 15-minute time frame, price already showed you like, okay, be above this high, I can be able to buy until this certain level, right? I can be able to buy until this certain level. Probably in terms of taking trades, it wouldn't be advisable now because of there's not really much to reference off of, and these highs are very close to each other, right? So probably if they would have came probably to this level, you could have maybe taken trades. You would have had much more data. So goal is at the on-time high and learn to know when to trade and when not to trade. Because when you look at the 1 hour, there's not really a structure to play to reference of, and also on the 4 hour, there's not really much to use because as you can see, we already have three bullish candles of 4 hour candles. So there's not really structure that you can use to work off of. So don't try to force trades. So whenever there's nothing to trade, don't trade it, and then yeah, pretty much. So thank you very much, guys. This is day one of the 7 day series. So today, and remember today, the main goal was to understand what ICC means and how it applies to price action, understanding the bullish and the bearish structure, also understanding your higher highs and higher lows, and lower highs and lower lows, or also understanding how structure tells you where price is going. So you can be able to just sit in front of your market, mark off your charts in terms of your lower lows, lower highs, understanding where the trend is. So those are the kind of things you want to be able to do. Say, okay, I want to understand where I'm at in terms of the trend, probably use 4 hour, 1 hour in terms of understanding the structure, and then mark off those, where you got the indication. If you are on a downtrend, mark off where you got the indication, where you lower lows were being broken. So those is where what is this points of interest in the market. So you will be marking those things off, and then probably from there you can switch on to smaller time frames where you can look for where price has been bouncing off. So when I was talking about where price has been bouncing off, some people didn't understand that, I think, the other time. So let me just go to 15 minutes. I will probably look for something based off what we were doing. We were trading last week. Okay. So when I talk about where price is bouncing off, you usually find something like this, right? So you look at the market or you look at the charts, you're like, okay, what's currently happening, right? You want to look at price came to this level and to show down why, right? Came and then price decided to come to this level and then came to this level and then shoot up. Why? Came to this level again and then shoot up. Why? Why is this level important, right? You mark it off. You mark this level, like, okay, this level seems to be important, right? So whenever price starts to come below this level, and then this also is ICC but on smaller time frames, right? So this also showing that above this level, I'm bullish. You understand? So when you combine all of these things with what you've learned immediately, but it will become easy. It becomes much easier for you to be able to do these things. Now you can know, okay, this is how you're gonna be trading these things. You're gonna be taking those trades above this level, because now overall from the bigger time frame, you are bullish. You're gonna be willing to take trades above those levels. So you will be taking those trades above those levels. So ICC is not only limited to bigger time frames, but for now, because this is a 7 day series. We're gonna be covering it at the later days, maybe probably day 6 and day 7, how we can be able to use ICC on smart time frames. But overall, it works. And if you new to ICC and you're still learning ICC, try to work it day by day. That's how I'm working it out, right? So remember how we started, identifying your highs and lows. And please, 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 I beg you guys, I beg you very much, stop using other things on ICC, because that one is very, very dangerous. You will never see growth. ICC will sound like just another scam, strategy, or just another strategy that doesn't make money. So the best thing you can do for yourself and for people around you, or whatever community you trade with, the best thing is to forget everything. Forget everything you know. Forget liquidity. Forget fair value gaps. Forget other blocks. Forget everything. Forget those things. Just learn pure structure. Learn higher highs, higher lows. Learn support, resistance. Those things are very important. They're very key to ICC and market structure and price action, and how to use ICC, correctly. So thank you very much, guys. See you guys tomorrow on day 2. Bye.